right, welcome back to the Nadlin Forum Podcast Daily, everyone. It's Ruby here, and as always, I've got Leo with me. Big news, yeah? The Fed has finally cut rates for the first time in 2025. They dropped the target by a quarter point to 4%, 4.25%. Honestly, feels like we've been waiting for this move for ages, right, Leo?
Definitely, Ruby. It's been, let's call it a long stretch of steady rates, which I know frustrated a lot of my clients here in New York. Look, the Fed's been holding things tight at 4.25, 4.5 for what, 5 meetings? Now, all the signs are just piling up. Moderating growth, job gains slowing down, unemployment's ticking up, and inflation's still maybe not running wild, but not going away either.
Totally. It's just that weird mix. Growth softening, unemployment insurance claims apparently hit 263,000 in August, the highest we've seen since late 2021, if I've got that number right. And inflation, still a bit spicy, but it's cooled off compared to last year. It's one of those which pressure matters more kind of moments for the Fed.
Yeah, and the Fed's language, all that stuff about maximum employment and a symmetric 2% inflation target, it's, I guess, supposed to be reassuring. But if unemployment ticks up more aggressively, the question is, do we see them move faster with more cuts? I'm not so sure. But for now, they're treading carefully. You get the sense they're watching everything twice before pulling another trigger.
Exactly. And I mean, as we talked about in episode 9, when we covered what triggers a rate cut, the Fed's kind of in this juggling act. They want to help the economy, but they don't want to overdo it and let inflation sneak back up. But hey, that 0.25%, it's a signal. And I think borrowers, investors, they're all trying to figure out what that means for them right now.
So right away, we're seeing the mortgage market react. The 30-year fixed drops down to 6.35%. That's a pretty significant weekly drop, actually the biggest in a year, according to the Freddie Mac numbers. I mean, it wasn't so long ago we were bouncing above 7%. So, you definitely feel the momentum shift there. People, especially my clients, are suddenly a lot more interested. You see this every time rates dip. Buyers come off the sidelines, and there's a whole wave of refi chatter again.
Yeah, and we heard Sam Williamson over at First American say it's like lower rates are a positive signal for borrowers. That extra bit of affordability seems to just unlock demand. And, oh my gosh, I've got to say, when I refinanced 2 years ago, it was wild how quickly my inbox exploded. I thought I was clever, got in at a good rate, but literally, it's like there's this herd mentality. As soon as rates move, everyone jumps. First-time buyers especially, it's nerve-wracking, but those with their paperwork ready will benefit most.
You're right, and we've talked about this before. Sometimes you gotta move fast but not get caught up in the frenzy. As Sam said, even a small drop can be a game changer for monthly payments and qualifying. The refi boom we saw a while ago, that's starting up again. Clients are asking, should I refi now? Will it go even lower? And just like in episode 8, a lot of folks think the mortgage rates move after the Fed. But really, the anticipation starts pushing things earlier. Market's always looking ahead, never behind.
Yeah, it's that classic buy the rumor, sell the news thing, right? Some people wait too long hoping for a perfect rate and then end up missing out altogether. But hey, with this drop, both buyers and sellers have more breathing room. I don't want to sound too optimistic, but if you're thinking about a move or refinancing, it's definitely worth a chat with your broker now.
Shifting back to the bigger picture for a sec, the labor market, it's under pressure. Stephen Cates pointed out, long-term unemployment is now the highest since November 2021. We're seeing more people out of work for over 26 weeks, and initial claims just keep inching higher. That's not great for confidence, right?
Yeah, and all of that makes the Fed's balancing act even trickier. Politically, it's a whole thing too. Lots of pressure from the Trump administration pushing for more cuts to keep the economy humming along. Plus, a bit of drama with the new Fed board member, Dr. Stephen I. Moran. He just squeaked through with a 48-47 Senate vote. Not exactly a let's all hold hands situation over there.
Honestly, the Fed's caught in the middle. There's the background noise, accusations of fraud, debates over office renovations. It's almost like a reality show sometimes. But at the end of the day, people just want to know, will mortgage rates keep falling? And is now the time to make a move?
Yeah, and according to Danielle Hale at Realtor.com, markets kind of expect another 75 basis points of cuts by the end of 25, maybe bringing the Fed funds rate close to 3% by 2026. Fed members sound a bit less aggressive, but either way, mortgage rates dipping below 6.5% is already major relief for buyers. The big unknown is how inflation, bond markets, and housing supply play off each other this year. You can't just look at the Fed in isolation. You've got all these moving parts.
The real estate landscape is going to keep shifting. If you're an investor or homeowner, the best you can do is stay nimble and watch these trends. We'll be back with updates as things keep moving. But for now, just remember, what's happening with rates and jobs will shape everything from refinancing strategies to affordability well into next year.
All right, that's a wrap for today's episode. Leah, always a pleasure.
Thanks, Ruby, and thanks to all of you for listening. Keep your questions coming.
Stay tuned. We'll see you next time on the Nadlan Forum Podcast Daily. Cheers, everyone.